Bitcoin and Ethereum retreated from recent highs, with Bitcoin hovering near $113,000 and Ethereum at $4,239. Profit-taking, coupled with nearly $1 billion in forced liquidations, underscored fragile sentiment ahead of Federal Reserve Chair Powell's Jackson Hole remarks. U.S. spot Bitcoin and Ethereum ETFs mirrored this pressure, recording roughly $1 billion in outflows as institutional players tactically trimmed exposure. Still, the broader market remains resilient, with total capitalization just under $4 trillion and stablecoin inflows pointing to sideline liquidity waiting to re-enter risk assets. Institutional and corporate maneuvers signal that infrastructure expansion continues even as price action consolidates. Ethereum led a $710 million surge in stablecoin flows, while SharpLink disclosed holdings of more than 740,000 ETH in treasury. At the same time, Plasma's new on-chain yield program attracted $250 million in deposits within an hour, highlighting robust appetite for yield-bearing crypto products. On the corporate front, Trump-linked entities made fresh headlines with mining acquisitions and a $1.5 billion fundraising plan for token-linked ventures, blending politics, finance, and regulatory scrutiny into the narrative. Meanwhile, structural shifts are gathering pace. SoFi's integration of Bitcoin's Lightning Network into remittances, Toyota's exploration of blockchain-based real-world assets, and Solana's throughput burst past 100,000 transactions per second, all point to an ecosystem pushing into mainstream use cases. Regulatory clarity also advanced, with the SEC formally closing its Ripple case while levying a $125 million fine, even as Kwon pleaded guilty to fraud tied to Terra's collapse. Combined, these developments reinforce that while near-term volatility may test investor conviction, the underlying trajectory remains one of accelerating institutional adoption and tightening regulatory frameworks, laying the groundwork for the next structural leg higher.